21 minutes past 7 now. Business and rumours of a bailout for Italy have been stirring the markets, Simon?
Yes, John. Over the weekend, there was a rumour that the IMF were in talks with Italy to about a €600 billion loan. This morning, the IMF has come out in the last hour, in fact, to deny those reports. And they've been enough to see shares in Asia rise and then fall again. The denial has reversed those moves. Earlier, I spoke to Giuseppe Fontana, who's a professor of monetary economics at Leeds University Business School. Given the scale of Italy's problems, I asked him whether a short-term sticking plaster would be much help anyway.
The problem we are facing is that Italy have been dragged in this sovereign debt crisis because of the lack of growth in the last 20 years. So the first things really Mr. Monti and the Italian governments have tried to do is to make sure there will be growth in future. Now, the problem is that whatever austerity measure or policy measure the Italian government is passing will take time before they have their own effect. And so people are concerned what is happening between now and the time in which we will see the effect, which may be a question of months or years ahead.
OK, we've got auctions this week, not just by Italy, but also by Spain. We saw borrowing levels for short-term Italian debt hit 8% at the end of last week. What do you think the markets have in store? How will the auctions go this week, do you think?
Well, talking about the Italian government, I think there is an auction for €5 billion of debt, which it's a minor proportion compared to the 1,900 billion that Italy has. So it's a small portion, and certainly the interest rate will be very, very high. Markets are very, very, very uncertain. So it shouldn't be a major concern, though the numbers are worrying in terms of interest rate and the spread on other bonds.
Is some sort of bailout of Italy, whichever party leads it, is it inevitable now?
No, really. I think, Simon, we should distinguish short-term issues from long-term issues. Short-term issues, certainly euro is not growing, and certainly there is a serious chance that we'll face a liquidity crisis. And there are some ad hoc national measures that are being discussed. ICB, quantitative easing, euro bonds, those are all short-term solutions. They are not going to solve the long-term problem, which is a deficiency of aggregate demand. I think that is a problem not only for Italy, it's a problem for Europe and probably the world.
Going into this week, Italian bonds are currently yielding 7%. That's down nearly 1/5%. It used to be alarm bells ringing if you got up to 7. We're now coming down to 7 in the 7 to 8% bracket at the moment.